Hey guys, Tony Denaro here. Welcome back to the channel. Today I'm going to be talking with you about JPMorgan blockchain, the JPM Coin, and Onyx by JPMorgan. These are all wrapped together, making the news in the past couple days, and it is widely being misunderstood. Let's get to the real details right now. The news article we are going to be focusing on today is this one from Bloomberg on May 26. JPMorgan finds new use for blockchain in trading and lending. This is very different than the possibility of the U.S. Federal Reserve issuing a crypto coin, the CBDC, Central Bank Digital Coin. I did talk about that a couple days ago in a video on the CBDC, and I'll put a link to that in the video description for you in case you missed it. But according to Lael Brainerd at the Federal Reserve, that is probably about 5 years away before we get the possibility of a central bank digital coin. Now let's talk about JPMorgan and what exactly they have going on and what has been going on with JPMorgan actually for the last 5 years in this space. I have been investing in crypto for a long time, and the fact that big banks and financial institutions are getting on board with crypto is one of the reasons that I am bullish on crypto for the long term. So I'm not worried at all about the short-term bear market that we have been in. There's too much big money in crypto for crypto to go away. There are many big financial institutions and individual investors in the finance world putting a lot of money into crypto. In fact, the JPM coin was announced back in late 2019, 2020. And we can see here in 2019, JPMorgan became the first global bank to design a network to facilitate instantaneous payments using blockchain technology, enabling 24/7 business-to-business money movement by unveiling JPM Coin. Being on the blockchain, JPM Coin is a permission shared ledger system that serves as a payment rail and deposit account ledger, enabling participating JPMorgan clients to transfer US dollars held on deposit with JPMorgan. JPM Coin is part of the Onyx system by JPMorgan. We're going to talk about that in just a second, but the primary goal and what they are testing right now is cross-border payments. Let's go back to that article that was released on May 26 and talk about cross-border payments and how JPMorgan is using the blockchain. And just to reassure you that the use of blockchain by financial institutions is something that many of them have been using for years now. This is not some new invention that they're designing to spring on Wall Street next week or next month to pay off retail investors in case of a short squeeze. This is being used between these financial institutions and their commercial accounts or even other countries. And at the bottom of the article, they get right into that. Let's start at the bottom. For years, Wall Street institutions have been exploring the use of blockchain in their businesses, such as interbank payments, mortgage loans, and cross-border trades. Vanguard and State Street have traded foreign exchange forward contracts using blockchain technology to reduce counterparty risks. Goldman and BlackRock are also working on the tokenization of a range of traditional asset classes. And just to be clear, these are not decentralized blockchains. These are centralized, owned by private entities. Let's talk about JPMorgan and the test that they did and announced on May 20th that is being talked about in this article. Two entities transferred the token representation of BlackRock money market fund shares as collateral on its private blockchain. The end goal for JPMorgan in this test phase is to allow their larger commercial and foreign country investors to pledge a wider range of assets as collateral and use them outside of market operating hours. Why are these big institutions looking into using the blockchain? Well, if you are familiar with crypto, you might already know the answer. The blockchain provides a frictionless transfer of assets and instantaneous settlement. So no more T+1, T+2, T+3. By eliminating that settlement time, they reduce or even eliminate counterparty risk. And that is the big reason that these companies are moving to use blockchain on these big transactions. If you want to learn more about Onyx, which is the group inside JPMorgan, which is managing this rollout of blockchain technology, I'll put a link to it down in the video description. But with Onyx and with this blockchain, JPMorgan has become the first global bank to offer a blockchain-based platform for wholesale payments transactions. And yes, you can even find them in the metaverse if you use Decentraland. If financial institution blockchains are of interest to you, I encourage you to do your own due diligence, and I'll put one more link for you in the video description from CoinDesk, where they talk about JPM Coin emulating cryptocurrency was never the plan for JPM Coin. And to be clear, it is not available to retail investors, nor is it traded on any cryptocurrency exchange. As for long-term plans for financial institutions and cryptocurrency stablecoins, things are going to continue to develop over the coming years, so I will keep you up to date as things develop. In the short term, in the now, we are still in the early testing phases of these blockchain technologies, and these testing phases for the moment are limited to foreign governments and large institutional clients. I know there's a lot of rumors going around about USDC and a Fed coin and JPMorgan. If you're worried about digital coins and your retail investment account, they are years away from getting to that point. I am Tony Denaro. I want to thank you for watching. This is your home for seasoned and reasoned financial information. No clickbait, no misinformation, real due diligence. Join me on a live stream during market hours, Monday through Friday, where I answer your question on stocks, options, crypto, and more. No super chats required. Don't forget to buy and hold that subscribe button if this is your first time here. And I will see you on the next video.
So you wanna go to war with me? You're talking like